8, 7, 6, 5, 4, 3, 2, 1. Hi, everyone.
Good morning, everyone.
With the Enriquez Group, and we got David over here.
I'm with the David Wright Group. We're live again with you guys. We're working on becoming better and making this better, every time we do it for you guys. So please feel free to give us some constructive criticism, reach out, and we're just looking to become better.
Yeah, before we went live, I got some constructive criticism from David saying that we need a liftoff at the end of that countdown. So I'd love to hear your feedback.
Lift off, almost similar to NASA, where it's like failure is not an option.
So we did this buyer seminar a couple weeks back. Our plan is to do this buyer seminar and switch it up every single time we do it. Do a move-up buyer, downsizing, investment purchases, things like that. So really kind of make each one a little bit of a variation of a different one. Also make this more interactive. So as we get questions, to answer questions. So if you have questions, if you know someone that's looking to purchase, share the link, pass it on. And we'd love to kind of go from there. So let's get the ball rolling.
Let's get this party started. So this is our first time homebuyer seminar. It's first slide, where to start with home ownership plans. Well, a lot of things that you really want to look at is current job stability. You want to look at your job. Is it stable during this time? Are you having issues? There's a lot of people having issues right now with furlough, cut hours. And so it's very unique for you to especially look at the stability of your job. You also want to look at the growth that you can have in your job. Are you going to get a raise? Are you not going to get a raise? Then you want to look at your budget. Did you analyze your budget? Did you look at where all your money goes? Inflows, outflows. What are you spending on groceries, food, gas, electric, everything? Because when you're buying a home, every dollar counts. Other things you want to kind of go through and look at is, are you saving for retirement? Do you have an emergency fund? What about your yearly goals? What about vacation goals? Because once you get a mortgage, everything has changed. And then the final thing you really want to think about is, what's your ideal monthly payment? It's super important, Vinnie.
Yeah, one thing to remember, and I mean, Dave was talking about the idea that you might have the funds or things are going on in this current climate. Be aware, maybe right now is not the best time to purchase, yet to get the information, it's always great to get the information, because you might be looking to purchase in 6 months, a year and a half, 2 years, whatever it might be, but we all start somewhere.
Yeah, and it's interesting you mentioned that, Vinny, because the new data shows that they're expecting a fourth quarter recovery for this whole outbreak, which means while this is going on, there'll be a lot of opportunity for those of you who choose to jump into that pool. So next step, how to finance your home and pick a lender. So a lot of you will go out there and just randomly pick a lender, Uncle Billy Bob, your former cousin's uncle's roommate. But you're making the biggest decision of your life. Make it a smart one. Google that person. Look them up on Zillow. Look them up on Yelp. Do they exist online? You want to get a loan officer that's helping you with experience. So read their reviews. Check their credentials. It's super important that you pick the right person to help you.
Yeah, do the legwork. I mean, it's something I say on every time we do a buyer seminar. For most time, people do more research on the phone they're going to purchase than the realtor or lender they're going to work with.
Now that you have your lender, what's the next steps to secure your home loan? Well, first of all, you're going to do your loan application. As a lender, we look at everything in twos. So last 2 years taxes, 2 most current pay stubs, 2 years W-2s. We're going to look at all that. 2 months bank statements. See the sequence here, twos. And the other thing, we're going to look at your credit. So for those of you who always look online and freecreditreport.com, creditkarma.com, and you go, holy mackerel, my credit is so good. Well, when we pull your credit as a lender, we're doing the hardest pull. It is a hard pull, not a soft, which means your credit score is more than likely going to be lower. So keep that in mind. The other thing that you really want to look at is when we pull your credit, how can we improve your credit? Because a lot of people out there always want the best rate. The best rate is when you have above a 740 FICO.
And the thing is, remember, maybe you might not fit the criteria of the 2 years W-2. You might own your own business, or you just have the job for 1 year, but you have a contract in place for the next 5 years. Things like that. There are unique situations that play out, and you can still get loans. If you don't have everything here, don't worry. Still reach out to a lender like David. He kind of walk you through to see if you can qualify, maybe for another loans. If you don't have everything here, don't worry.
Next, sorry about that, I lost the stream for a minute. Once we have everything, we're going to review all your stuff, look at all your options. We're going to look at what's your ideal monthly payment. Then we're going to look at what else is important to you. What about your down payment? Then the other things that's going to kind of go into things that are a little bit more fun that Vinnie helps with is what's the location you want to work with? Appreciation. What is most important to you about that? Because getting the loan has a lot of important factors as far as what's most important about the down payment. Do you want the lowest closing costs on your new loan, or do you want the lowest rate? Or do you want the lowest long-term cost of borrowing? A lot of different things go into there. But then the other things that we're going to pony right over to that Vinnie will go into is what's important to you about the home.
Yeah, and one thing to think about too is, and this can be a misconception out there, is that rates don't get locked in 99% of the time until you actually find that property. So during escrow. And as the market's changing and the rates are changing fairly consistently, having a lender that can walk you through and tell you, hey, you know what, I think we should hold off for tomorrow or the next day or the following week, because I think rates are going to get a little better. It's going to help you get the best rate possible. So if you talk to one lender today and talk to another lender in 6 months or 7 months or a year from now, and one's giving you a different rate, it might not necessarily be basically what they're offering. It more could be on the market. So just be aware of that when you're talking to multiple different lenders. Probably talk to them about similar time windows.
Yeah, the rates change every day. Sorry about that.
You're good. Yeah, and then with the down payment, interest rates, that's all him. With the property that you're going to purchase and how you're going to structure the offer, that's where I jump in. But we'll get to that soon.
Oh, that's the wake up. That's the wake up slide, Vinnie. That's the crowd pleaser right there. So is that your lucky rabbit? Probably not. But the reason why you don't want to rely on luck to get your loan is because if you do your pre-qualification correctly, you're going to avoid all these horror stories that you hear from all your friends and family that, oh, the loan took too long. Oh, they wanted more money. Oh, I got to pay off credit cards. Oh, the lender changed their mind. I actually just did this with an agent yesterday, Vinnie, where they called me so pissed because the lender changed all the terms, everything, for a problem that they should have known a month ago because their pre-qualification wasn't done correctly. So take the time to do the pre-qualification correctly. Let the lender look at everything. It's important that you send it all in. You want to have the best options.
Yeah, I'm going to tell you a quick horror story.
Oh, God.
Okay. I tell this in all the different buyer seminars talk about. The easiest way to describe it is David is like the attorney and his assistant's like his assistant attorney. And then you have the judge, the underwriter. Right. So he's trying to build a case of why he deserves to be able to purchase the property. Right. So he has to have the information available to give you the pre-qual. And for some people, they'll give it based off assumptions, pre-approval and everything like that. Yet the more he dives before you actually find that property, the easier it's going to be, and to make sure there's no stone hidden right there where you can't actually purchase. Now, the horror story is I had a client moving from, I think it was Arizona to San Diego. He was working with a big bank. I'm not going to mention the bank. And the originator didn't talk to him, ask him enough questions. I relayed to him, he's going to be transferring from there to here, right? He's going to be actually moving from here to there, but he didn't have a new job. He goes, no, that's not a problem. We can use basically what he's getting there, and once he gets a new job. When we got into actually escrow the property, because the originator didn't dive deep enough, we actually had to back out of the deal because he wasn't qualified anymore. Because once he sent it to the underwriter asked that question, well, where's the transfer letter? And he said, I didn't have a transfer letter, so he couldn't use that income for the purchase. So just make sure that the originator, the lender like David, is asking enough questions so that you don't find that dream home, or we don't find that dream home together, and now you can't purchase it.
And then the lender is the dream crusher.
Yeah, exactly.
Lots of different loan types out there. So right now, a lot of you are noticing we're on a lockdown. We're staying at home. Did that change lending? Yes. Since this whole lockdown has happened with the COVID-19, FICO scores have changed for loans. Loan programs have changed. A lot of things has changed. So the basics are still there: FHA, VA, conventional loans, jumbo loans, although they're all more restrictive now in the current environment. And I would tell you, Vinny, I anticipate them staying that way for probably about the next 4 months, maybe 6 months.
Yeah, I mean, I can talk to one lender to the next lender. This loan's not funding. This is not going through. It's in underwriting still, taking longer to look over the appraisal. So yeah, just be aware that it is fluctuating. You want someone that's going to walk you through and give you some kind of peace of mind, because buying a house can be stressful. And in this climate, if you don't have enough information, it can be even more stressful.
That's you, Vinny. Tell us a little bit about the uniqueness of the market now, since we're current.
This is going over the last 5 years. Now, the last 5 years is not necessarily what the next 5 years are going to be. You see that a lot of people saying, well, if you would have bought 5 years ago, this is what you would have got. I personally think that's a wrong way of looking at it, because the market goes up, the market goes down. And if you really go off the affordability index, we're probably not going to get to these 5-year gains that was in the past. So be careful when someone says, hey, don't worry, purchase this property right here, because if you would have bought this 5 years ago, you would have made this much money. So just imagine if you would have, where you're going to be in 5 years from now. And that's a tough way of looking at it, especially if you're doing an adjustable or something like that, or interest only. So be very, very careful when you try to project. Now, you can kind of factor in more so over the last 6 months, year, 2 years, and kind of see where the values are trending to get a better understanding of that. But really focus on the monthly payment. The monthly payment is where you should focus on, and not a quick purchase and then making all this money off the equity and then selling it again. Focus on a monthly payment. Focus on that you're going to love to live in that property. Now, if you're looking for an investment property, now that's a different story. So talk to your realtor and dive deeper into what you're actually looking for in a home.
And you know, Vinny, I think a lot of people come to you guys and they tell you they want this.
Yeah.
They want that unicorn property. That's perfect. And that's hard to find. You want to focus on the bigger picture, the monthly payment. If it's a investment, it's the cash flow. Because, you know, at the end of the day, when Vinny closes on you with your house, he wants to make sure that every day you wake up and it's another rainbow.
I mean, this is what I tell people all the time. If you're married or have a significant other, right? No one's perfect, but that person is perfect for you. Just like a property.
Ooh,
property is perfect, but is it perfect for you? That's what you have to focus on. And in your heart, that's going to be your unicorn.
That's a good one, because not every day is a sunny day.
Oh my gosh, how many do you have of those?
These are my new props. I made them with my little one because we're quarantined right now.
I'm excited to see what's coming up next. So what's the average closing cost for a new home? Now, closing costs generically, I mean, are probably going to be about, I mean, let's say 2%. I mean, David has here at 2.25%. They can be less. I mean, they can be more. The biggest things are property taxes. Sometimes there's some originating fees in there. Now, with closing costs, though, you can actually get assistance from the seller. So that's something that we can work on, putting an offer together where we have closing costs rolled into the offer, and now that 2% or 1.5% or wherever it might sit is actually paid by the seller. So it does come off the bottom line for the seller. So it all fluctuates on where you're going to offer at and everything like that. So just be aware.
Yeah, closing costs is one thing you see a lot of lenders with different people. Will all of a sudden Vinny finds them the perfect home. Not Vinny, we're going to say another agent finds them a home. The lender gets them into escrow with the loan, make sure that's done. And then next thing you know, 1 week before closing, the buyers go, holy cow, my closing costs are this. You want to discuss your closing costs day one with your lender. Nobody likes surprises unless it's money or vacation. So make sure you talk to your lender about the closing costs day one. Super important.
I mean, one of the big things I get is usually for VA buyers, where they tell me, they go, "Oh, don't worry, we're not paying anything." I go, "Well, you do have closing costs. You know, I mean, you do have, there's non-allowables and allowables, but you do have some sort of closing costs. Also, you have an earnest money deposit, which fluctuates based on how the offer is structured. So yes, technically you have no down payment, but closing costs are a different ballpark."
Totally.
So very important things to think about when buying. So how long do you plan to live in this property? Generically, by the Association of Realtors, they say every 5 to 7 years, someone's looking to buy or sell property. Where you buy is important for help for resale and rental value. Does buying a home still allow you to have life, sleep comfortably? Can you still save money towards your retirement with this new home? Now, there's an idea out there that, all right, I'm renting at, let's say, $2,000, but the purchase price that I want is going to cost me about $2,400. So you're looking at that $400 difference. You're like, well, I could cut out eating out, I can drinking, alcohol and Starbucks. And it's one thing to say I could do it, but when it actually goes into fruition, that's a totally different game. So if you're thinking a couple of months or a couple of years out of doing it, get an idea of what your monthly payments are going to be, then the difference that you pay in rent towards what your projected monthly payment would be, put that in a savings account. So see how it feels in your pocketbook.
The other thing that you can have the lender go with you can have over a buy versus rent analysis. Look at that. You can also look at the after-tax savings when you buy a home as well, because you're now going to be able to expense the mortgage, interest expense, and the property taxes. But all this still, it's like you really want to pony right back to going, can you afford the payment? Can you live there, like Vinnie said, the next 5 to 7 years? Because that's ideal. Because you know what? You want to wake up in that home every single day and be like, it's another sunny day in paradise. I had to throw that in there, but it's super important.
The prop I have is basically the 1998 champion Padres. You're a San Diego fan when basically you don't have a World Series out there. Basically, we win to the World Series.
Got that banner behind you.
One day, I have faith in the Padres. So if you're not a Padre fan, you probably had a couple more happy days, but don't worry, we're gonna get there one of these days. Anyways, gotta get back on track. All right. What is beyond important? Choosing the best realtor. So check their online reviews. Check their license number. The higher number means new to the business compared to rookie. Do they do it full time? Do they own a home? How many homes do they really sell? Experience matters. This is one of the largest investments in your life. So the idea right here, I'm gonna just pick and choose a couple. But the idea of how many homes they really sell, I want to say it's about 3 homes on average. The average realtor sells in San Diego County. It might be 2.5. I don't know. But
I think 3.77, which I don't understand how you can sell 0.77 of a home, but they fall out, I guess.
And that's based on active realtors. Because if it was based on all the realtors in San Diego County, it'd be a negative number of how many properties were sold in 2018. Yeah, not 2019, but 2018. So it'd be a negative number. So there's more realtors, right, that have their license compared to properties that were sold in 2018. So that should tell you everyone has their license, but how active they are in helping people buy and sell property. There's that idea that what you do, 20% of what you do is 80% of your results. The same thing happens in real estate, that probably about 20% of the realtors do around 80% of the business. So dive deeper and see how much business they're doing, because the market changes, drastically. January can be different from February. February can be different from June. June can be different from December. So if the last deal was in January, but they're helping you to buy a property in June, do you think it's better to have the knowledge base of what's going on in June compared to how the business was in January? And in this market, in the last probably maybe 8 months, 9 months, the market has changed drastically over those ups and downs of the market.
And the other thing is, don't be fooled by the social media. Don't look at Instagram or Facebook and and go, oh my gosh, this person posts so many houses all the time. They must sell tons and have tons of experience. Just because you can post good on Instagram or post good on Facebook doesn't mean you actually sell homes. So look at the real numbers. The real numbers are what matters, not people's, going online and being like, look, I'm a delicate flower and I do great stuff online. I sell tons of homes. But the reality of it is they're not selling that many homes. Look at the facts. Look at the real figures. Super important.
And as you can kind of see, so last time we did this, the last buyer seminar was 50 minutes. We're trying to compress it a little bit so it allows more time for questions. So if we go a little fast, give us that feedback comparatively to the last one. So give us that feedback. We're trying to give you the information, but if you do have questions, feel free to reach out to myself or David. So now you have the loan set up, because of course you've talked to a great lender like David and a great realtor, maybe like myself. Some of my colleagues.
Props there.
But so next you got to think carefully of what you're looking for in that property. So do a buyer's consult with the with your realtor that you're going to work with, because what's going to happen is they're going to help you come to the realization of what you're looking for in a property: house size, location, schools, appreciation, price. You can think that you're looking for a house in East County, but then once you dive deeper into it, you realize that you need a condo or a townhome in
La Jolla.
In La Jolla. Yeah, it can be something like that. So really diving deeper into where you feel comfortable with on that monthly payment, schools, size, everything like that. And they can help you, especially if they're doing this on a consistent basis.
And you may start looking at homes. So Vinny, tell me if this ever happens. A client comes to you and says, I want to live in this area and I like this, this, and this. And then later on, they buy in the totally opposite different area and opposite neighborhood.
Yeah. I mean, I had a client that was like, I want to buy a house in, it was like Normal Heights, I think it was. We looked at some properties in Normal Heights. He ended up realizing, kind of assessing what he was actually looking for. And in the end, he ended up buying a condo in Spring Valley. It was actually, yeah, it was a condo. So he found out that the monthly payments that he was going to pay would offset the drive that he would take every day for work. And that's just what he came to the realization of. So I mean, as a realtor, we do this on a daily basis, so we can see the trends of the market. We can give you insight into what areas to kind of focus on. Yet in the end, it's your decision, and we're just here to help you get to where you want to get to.
It's to guide you. It's to really explore all options for you and to help ensure that at the end of this, it's like you love the house and it's good. Because sometimes you may think you want to just live in North Park, but as it turns out, there's better opportunities in South Park. So we didn't mention right here on these slides, but we're gonna talk about it really quick. Is that earnest money deposit, Vinny? A lot of people don't know what that is. What is the earnest money deposit when someone writes their offer and sees that on there? What does that really mean?
So it's a good faith deposit. So what happens is you're putting your good faith deposit into escrow, and the escrow is a time frame and it's also entity. So the entity, right, third party entity, you're going to put that deposit in there. The seller is going to put, in essence, their property in there, and now that contract that was agreed upon goes forward. So it holds your funds in there. You do have the ability to get buy the contract, get your deposit back, and then also there is the ability, if you're on the selling side, if you pass your time frames, to get their deposit. So it becomes kind of a balancing act, something that you want to really dive deeper into when you're doing your offer and talk to your realtor about of how that technically works. But yeah, there is the ability to get the deposit back and also lose it based off of how you structure it. Now, talking about the idea of how to structure it, you have a purchase price. Now, just because they're asking a certain price doesn't mean that's the price that it's actually going to sell for. Sometimes they price it lower to get a bidding war. Sometimes they price it high, overvaluing the property, coming to the realization that they need that it's going to sell at a lower price. Terms and offer, escrow time frame, generically 30 days, yet can be shorter. based off the lender you're working with. I mean, close the VA loan at 17 days. Based off the lender, you can close things fast. With what's going on in this current climate, it's kind of tougher to kind of push the timelines a little bit lower because there are some things that can be outside of your lender's control. But for the majority of the time, you can shorten it when you're working with a good lender. Like David, what are you closing at right now?
Oh my gosh, I'm still doing 21-day closes, which is kind of ridiculous because in the current market, we haven't hit the slide yet, but appraisals have changed. That's totally changed the game. Some houses don't even have appraisals now, which is even more unique. And then as far as what we used to do with down payment assistance programs, those are all on hold. So everyone now that's really looking and doing things, they're more serious. And the lenders that are doing purchases, they're serious. They realize you guys as agents and clients, you need the performance because it's a very unique market right now. There'll be good deals that come up. Buying right now is not for everyone, but for those of you that remember the 08 to 010 crisis, there's a lot of opportunities when things go bad, which, you know, me and Vinnie feel bad for everyone in situations out there in the current environment. But it is going to give you guys some opportunities if you jump into the water right now. The pool's deep, but for those of you that want to swim, you could probably get a good deal.
Yeah, and again, focus on the monthly payment. I mean, rates are low right now, so they can help you out, your purchasing power. Now, going to number 3, fees being split or paid by each party. That's all negotiable. How you structure their offer, who's paying for what. You have basically your termite report, escrow costs, title costs, HOA docs, stuff like that, and it's all how you want to negotiate it. Items to be conveyed or in sale or not. You have personal property, real property. Generically, just the real property conveys. Personal property can convey with the property. You not want to do abundance of it, but generically the personal property like the stove, refrigerator, stuff like that, if it's structured in the offer, then it will convey. For any loan type, you need a stove, a working stove, to be conveyed in the process. So that's one thing, just to make sure you put the stove in there, but other items in the property, you can't put that in the offer based off of what it is. And then EMD, generically, I mean, 1 to 3%. I mean, if you want to get really aggressive, you can do up to the 5% that David has here. It can be less than that based off of how you're structuring it and based on if the seller is willing to accept a lower earnest money deposit. So all these things are negotiable. They do have generic timelines already put in place, yet based off of how you structure your offer, you can shorten them or make them bigger.
So Vinnie, you said negotiated a couple different times. I noticed that.
Yeah.
Well, if your realtor is not good, there's going to be no negotiation. It's going to be you losing. That's another reason why the realtor is beyond important in this. If your realtor is not a good negotiator, you pretty much, you might as well just throw your money away. You're going to lose a lot of money. Super important.
Well, the one thing, I mean, you have to really think about, let's say you're using a realtor that's maybe doing 2 deals a year, right? And that's what they're living off of. If they're doing two deals a year, right, your deal that they're helping you out with is basically 50% of what they're going to make that year, correct?
That's terrible.
So if they're making 50% of what they're going to make that year based off of the sale of your property, the purchase of your property, do you think they rather care about making sure that you get the best deal possible, or that they're getting food on their table for themselves or maybe their kids?
Yeah, that's a shame.
So what happens next with your offer? If the seller likes it, then boom, offer accepted. If not, there can be a counter. There can be a multiple counter based off of if there's multiple offers. But once there becomes a meeting of the minds, both parties accept the offer, the counter offer, then you open up contract and congratulations. So contract accepted, now what? Escrow's open, instructions are issued to you for wiring EMD, lender requests fees from escrow and title so they can disclose the loan. Loan doesn't start till you sign disclosures. Realtor helps in scheduling home inspection on all other inspections deemed needed to protect you and your investment. Lender orders appraisal to help confirm the value. Escrow sends a package to fill out, and then off to the races. So for the EMD, make sure you're wiring the money to the right escrow. There are wiring frauds out there. Be aware of that. Lender request fees from escrow and title. You want to get into that? I know that can be kind of a hiccup sometimes, especially if escrow is not providing that in a timely manner.
It's the thing that Vinny just went over right there is once escrow is opened, the lender has to move very fast because to make time frames, we have to move fast. So the first 4 days are super important. Over those first 4 days, that's when we're going to push a majority of things on you as a buyer to make sure you sign disclosures. Make sure your EMD was wired. Make sure you sent us proof. And we're going to request any other documentation we need from you in those first 4 days, because for every 1 day you delay as a buyer, that's 3 days of time for a lender. That's a lot of time loss. So if you take 2 days to get us an item, we almost lost 6 days of time. And if your escrow is 21 days, that puts stress on you later. And the main part, you know, when you're buying a home, for me and Vinny, both of us, is to keep stress really low. And we do that by doing everything up front correctly. And then when Vinny needs something or I need something, please get it over to them, get it over to us really quick, because we don't want you to stress out later.
Yeah. And then Realtor helps in scheduling home inspection, other inspections. The biggest one is the general inspection on a property, home inspection. They're going to basically look at a little bit of everything. It's just like when you go to a doctor for a checkup, that's what they're going to do for the property. They're going to just do a checkup on it. Now, if they see, okay, there's something wrong, or there looks to be something wrong with the chimney, or there looks to be something wrong with foundation, that's when you bring in a specialist to do another inspection on the property. Usually at the age of the home and the kind of, if it's wiring, if it's an old wiring, you probably want an electrician to go out there. If it's piping, like the cast iron piping right there, and it's, I mean, in the 20s, 30s, it might be corroded inside, so you want to get that piping scoped. Just find a specialist on what you're looking at, just to dive deeper into it to make sure that you're protected. But for the most part, the home inspection is going to be the one inspection that you're going to get no matter what. Also, for a single family, usually you'll get a termite inspection also.
That's unique to it, changes right now. And Vinny, what's that home inspection usually cost?
So generically, you're looking at, based off the square footage of the property, somewhere between probably $450. If it's really big, maybe like $600. So the appraisal, the appraisal is probably looking at like $500, somewhere in there. 500.
But then you mentioned something key about termites, because a lot of you out there, you know, if you're buying in San Diego, California, we have a newsflash for you. There's this thing called termites. Most houses have them. Would you say they have them, most houses, Vinny?
Well, the funny thing is once you have termite clearance and they get rid of the termites, for the most part, what I've been relayed is that the termites actually jump to the neighboring properties. Yeah. So you could get rid of the termites, and then 6 months later have a termite. Like it's so funny because I've had people reach out to me and go, "I just got clearance 6 months ago, 7 months ago." And I'm like, yeah, but that was 6 or 7 months ago. I mean, maybe one of your neighbors just sold their properties and they had termite clearance, and you got their termites. So, yeah.
It's this is what I wanted to mention is recently, just now, we literally have a new update on VA and appraisals and termites. So what's VA now allowing? They're now allowing a visual inspection. Basically, if the agent and the seller of the house, the owner, can say, hey, there's no visible infestation of termites, we'll let it go.
Wow.
That's unheard of. Like, and then the buyer, the VA buyer, signs an acknowledgement saying he acknowledges that the realtor or the seller of the house said there's no active infestation that's visible, and we let it go. So on VA, that's huge, because in the past, it's always Section 1, Section 2 clearance, and now they're letting us do visual inspections. That's kind of a little scary. I mean, I don't know, you know, what could be hiding in that house, but visual inspection for termites, probably not the best, because termites are typically quite hidden. So we'll see how that plays out.
So on to the next one. Your home inspection is done. Repairs are noted and costs are formulated. Requests for repairs are made. Repair requests have been negotiated. a price negotiation, further test. So again, like I went back to the idea that no property is perfect. There's going to be things that are going to pop up. That's what an inspector gets paid for. Now you're going to get a list of things, and now it becomes a negotiation with the seller saying, we'll take care of this, we won't take care of this, or we'll give you credit for that. Maybe the property, I mean, is fairly clean. It's really small stuff that you're willing to take on yourself. So maybe there won't be a negotiation, but for the most part, there's probably some sort of negotiation that does happen. Can be price oriented. It can be that they're going to take care of repairs on the property, or based off of what the inspector says, you could dive deeper, get a plumber, get an electrician, get a mold test, get a chimney sweep, that kind of stuff.
The loan side, well, while that stuff going on with Vinnie, we're going to basically process your loan. It's like Vinnie mentioned earlier, it's almost like an attorney and a judge type situation. We process your loan, which means we look at all the documents you sent to us. They're rechecked. Then we take all those documents, we send them to underwriting. What does underwriting do? Underwriting confirms that the lender did their job correctly as far as making sure that your loan fits all the guidelines for your situation and the loan type. Once the underwriter signs off on that, they issue final approval. There's usually a couple small things we usually ask for unless the job was done perfect, which sometimes it happens. There's some really good lenders out there, and there's also some really not good lenders out there. Once we get the final conditions in, we issue a statement called a closing disclosure. It's called a CD. You don't play it. It doesn't play music. So for those of you who think a CD is music, it's not in the lending world. CD is a closing disclosure. The closing disclosure shows your final terms on the loan, shows the interest rate, shows the loan term, shows the cost, everything. Once you sign it, there's a 3-day waiting period. And then after that, you get your final loan docs. And then another, I know Vinnie, me and you are kind of on the what's going on new in the marketplace. So I'm going to mention this now because with the final loan documents, some lenders have realized this is the 21st century. We're switching to almost all electronic. What does that mean? For those of you who have bought a house in the past and you signed 50 pages of documents with a notary and found it the most boring time of your life, you're now going to do it electronically. We're going to electronic signings, which means there will only be 7 pieces of paper that gets notarized. Everything else will be electronic. So in the current COVID environment, and once this is over, because it's going to get over, people, it's going to get better, you're going to sign loan documents electronically. That's basically bleep, bleep, signing a button, and then a notary shows up later, and you sign 7 pieces of paper, and you're done. That's it. After that, the loan funds. So the new electronic signing is huge. That's big, Vinnie.
So, okay, now is the process different in the challenging market? Yeah, I mean, I think one of the biggest things, at least for the price aspect of it, is going to be where are they pricing the property? Now, pricing is an advertising tool, and to figure out is that pricing they're pricing the property where they are going to be, or based off the climate, based off the situation, based off of where everything sits, is it going to be higher than that, or is it going to be lower than that, and how low if it is lower?
Yeah, it's right now. Everyone, you gotta, in situations like this, you gotta look for the sunshine, people. You gotta look for it. Is this gonna stay this way forever? No, but there's a lot of opportunities that will come. And if you look at what may be available right now in the next, I would probably say 3-4 months, is going to probably be a little bit cheaper than what's available when we actually recover later on. So
yeah, watch our market updates. I put a market update. We did one on Friday or yesterday, and we have a shortage of inventory in San Diego. That hasn't changed. We're not getting more properties on the market. People are still buying, but we have a shortage of inventory on the market. So what does that mean for you? Supply, demand, people are still purchasing. We'll see once this is all over, or as we kind of progress and becomes the more norm, if we're going to get more inventory on the market. But at this current time, we don't have that much inventory compared to where we were just 6 months ago, 8 months ago, a year ago.
And during this time, will there be people who panic and sell? Absolutely. What do you think, Vinny? Is there going to be panic sellers? People that think the world's coming to an end?
Yeah. There's definitely going to be panic sellers that are saying, I want to leave San Diego. I want to move somewhere else, and so on and so forth. Wow, I'm excited. We're at 40 minutes.
It's a PR.
Love it. Okay.
It's not like a deadlift, but besides that, a lot of you guys know me and Vinny. We're both into, being healthy, expanding your mind, working out. And so we're going to mention two things here. I'm going to mention, am I going to do this? This book. This is a great book if you want to expand your mind. And Vinny, what else do you have to share about expanding?
So, as some of you might know, I do a podcast, comes out weekly. It's called Road to Growth: Success as an Entrepreneur. It's not me talking. I'm doing the interviewing. I interview business owners. I've had actually interviewed someone the other day that was a spiritual medium. But for the most part, I'm interviewing. Yeah, it was a very interesting one. But I have lenders on there, attorneys, just business owners. Generic business owners, people that have kind of been in horrible times and found their way out of those times and kind of fought through and got to a better place in their world. So this is a difficult time for the most of us. We've been through difficult times before, some more than others, and we will fight through this. You have to have faith in yourself and have that big why. I mean, that's the one thing I've learned is have that big why of why are you going to fight through? Why are you going to get to that difficult time, that dark time, to get to the place you want to be to?
Yeah, agreed. You have to you got to maintain that drive. You got to maintain that discipline, and you got to focus on the bigger picture, because for some of you out there, it's like if you're the only one working in your family right now, or your hours were cut, you have to look at it and go, how do I make this better? Or how do I look at my current situation and grow from it to have a better outcome later? Because things are going to change, people. It's be safe, be strong, be positive. You got to keep the mindset going, because I just had to throw this out there. There is a rainbow coming, people. There's going to be a happy ending with adversity always leads to opportunity, which, we'll have some good outcomes. So.
Thank you, everyone. Follow our weekly updates. We have market updates on Monday and Friday for the time being, and then we plan to have another one of these buyer seminars as we kind of progress.
Yep. You guys have a good one. Thanks. We're going to do the next ones will be move up properties and investment properties.